Most Aggie parents assume that they need $60,000 in the bank to escape the Northgate rent trap. Spoiler alert, you don't. I'm Greg Schwartz, 6 years boots on the ground here in Bryan and College Station, and I help Aggie parents buy investments here in town. And I'm gonna tell you right now, you can do it for as little as $10,000 down. And today I'm gonna break down for you the 3 different loan options: the Kiddie condo loan, the secondary home loan, of course the conventional 20% down loan, so you know exactly which one fits your situation. So let's get into it. I mean, it's a no-brainer. Nobody wants to light money on fire. And quite frankly, if you're paying $800 per month for a 1-bedroom in a Northgate high-rise, that's $38,400 over 4 years, gone. You might as well light it on fire. But if you don't have $60,000 liquid for a standard 20% down payment, you're gonna need a different play. So let's talk about what options you have if you only have $30,000 or even $10,000 to put as a down payment. But before I sell you on buying a property, you're probably thinking, is renting better or is buying better? And that is a conversation that's specific to your situation that can only be had via a one-on-one conversation. So let's get that conversation started. Email me the word Aggie to info@schwartzrealtygroup.com and I will personally respond to you. This way we can figure out what is the best option for you and your family. The biggest secret in College Station is the FHA Kiddie condo loan. Now that's just a nickname. It's actually just an FHA owner-occupied loan. Basically, your student gets the loan and you act as like a co-borrower. Now here's what you need to know about the underwriting reality of this loan. First off, the down payment. If the file qualifies, you put as little as 3.5% down. That's the difference between $60K and roughly $10,000, a $50,000 saving. Of course, occupancy is key. Your student must live in the home as their primary resident. Underwriting needs to see this is clearly a home for your child, not a traditional investment property in disguise. Credit is a factor. While your income helps qualify for the loan, it helps immensely if your child already has credit history and a solid score. If they don't, start working on that 6 months prior to buying. If you're just hearing about the Kiddie condo loan for the first time, that's exactly why this channel exists. Go ahead, hit that subscribe button, and of course hit the like button if you want to keep me motivated to make more videos just like this. The secondary home loan is another great option for Aggie parents. Now this is the same kind of loan you would get if you're buying a lake house or a beach house, but in your case, you're buying an Aggie land house. The added perk is you can move your son or daughter into it, move in a few roommates to offset the rent, as long as you plan on and actually use it on a regular basis. So let's talk about some of the requirements of this loan. First off, as I mentioned, this has to be a house that you plan on using for personal use the same way you would use a beach house. Second, it has to be more than 50 miles away from your primary home. Most major metros are more than 50 miles from College Station, but this is important in case you live in Caldwell or Bryan. Another important piece of this loan, of course, is the down payment. You only need 10% down, which I know is more than an FHA loan, but it's about half of what you would normally pay for an investment property. So $30,000 is way easier on the bank account than $60,000. Overall, this is a great loan for those Aggie loyalists, those folks that come to game days, ring dunks, and graduations, and they're going to be using this house for their personal use while also having their son or daughter live there. Let's not forget about the good old 20% down investment loan. And I know $60,000 is a lot of money, but the truth is this is the most common loan product for my clients for a good reason. For number one, there's no mortgage insurance, also known as PMI. By putting 20% down, you eliminate the need for that insurance, which is going to save you about $100 to $200 per month. Number two, it's just a lower monthly payment. You have a smaller loan, therefore a lower payment, which increases cash flow from day one. You also have fewer hoops to jump through. There's no occupancy requirement, no FHA condition standards. It's the best loan for those experienced buyers who are looking for a traditional, low risk, higher down payment, investment style property. There are some loan products that don't work, so let's avoid the traps. For example, a VA loan requires you to live there, so you can't use it for your kids. And a DSCR loan, debt service coverage ratio loan, is a business loan, which strictly prohibits you from having family members live in the property. So let's avoid mortgage fraud and not use these loan products if you're buying for your son or daughter here in Aggie land. Let's do a quick recap, guys. We've got the Kiddie condo loan, the secondary home loan, and the conventional loan. Your down payments are going to be 3.5, 10, and 20% respectively. Of course, the Kiddie condo loan requires you as the co-borrower and your son or daughter to apply, whereas the secondary home loan and the conventional loan will just be in your name. When it comes to mortgage insurance, that will apply and affect you if you're doing a kiddie condo or secondary home loan where you're putting down less than 20%. When it comes to occupancy, if you do a kiddie condo loan, your son or daughter does have to live there as their primary residence. If you're buying a secondary home loan, you do have to use it as a vacation home, so you have to have plans to actually visit and stay in the house. And of course, there's no rules pertaining to occupancy for a conventional investment loan. The best use of a kiddie condo loan is if you're looking for a low down payment loan. If you're looking for something that you're going to use as game day, the secondary home loan might be a good option. And if you want just a good old 20% down low risk option, the 20% down conventional investment loan is a great way to go. If you're an Aggie parent who wants to dive into this, of course, you can shoot me that email. Just send me the word Aggie to info@schwartzrealtygroup.com or check out this video for more information about investing in our local town.